It's Tuesday, 1929. We are in New York on Wall Street. Markets are on the edge of collapse, and New York Stock Exchange is facing the most expensive run in history. On that day, over 16 million shares were traded. The next day, the panic peaked, with stocks having no buyers at any price. But the story of New York Stock Exchange started far earlier. Its origins trace back to the 16th, when the Dutch founded New Amsterdam near Manhattan and built a barrier, a wall. From this barrier comes the name Wall Street. The official founding of New York Stock Exchange was signing of the Buttonwood Agreement in 1792 on 60A Wall Street. It was a response to the first financial panic, and the Buttonwood Agreement set rules for how stocks could be traded. In the early years of the stock exchange, the trading continued on an informal basis, usually in nearby cafe houses where merchants met with people wanting to buy stocks. In 1817, the stock market was active enough for brokers to establish a formal organization, the New York Stock and Exchange Board. The number and variety of securities traded year after year steadily grew as America expanded. By 1886, trading volume culminated at 1 million shares for the first time in history. Thanks to its introduction of tickers in 1867 and installing telephones in 1878, the spread of information accelerated. As the stock market grew, the New York Stock Exchange had to move into a new building with a much larger trading floor. Designed by George B. Post, it was an impressive interior space with marble walls, huge windows, and gilded ceilings. The open-air space, stretching nearly 100 feet above trade desks, required adequate heating and cooling. Therefore, New York Stock Exchange called Alfred Wolff, and he designed 3 ammonia absorption machines, each with a cooling capability. This made New York Stock Exchange first air-conditioned building in North America. Now, we are entering times of 20s. The USA was one of the few safe places to store and invest money. The market had begun to overheat, and the end of the First World War marked a new boom in investing. Everyone thought the stock market only goes up. Large piles of money were thrown into market, and bubble formed, blew, and burst. In the middle of everything stands the New York Stock Exchange. Everyone wanted to sell, but there was no one to buy. It was one of the most challenging times for New York Stock Exchange. The 30s were terrible years for the stock market. The beginning of the Second World War in Europe marked times of uncertainty. During war, the market languished and encouraged investing in victory through the purchase of bonds via the war loan of the United States. The market recovered its vitality in the post-war years. Now, moving into the 50s, New York Stock Exchange continued in automation. The introduction of technology and computers increased the trading rate from 1 billion in 1960 to over 3 billion in 1970. As we progressed, the New York Stock Exchange became a symbol of American capitalism. The current floor began to take shape in 2011 with the addition of new broker booths and new trading posts that feature high-definition data display screens and the most current workstations. Recently, the biggest challenge for New York Stock Exchange, the COVID-19 pandemics. On March 23, 2020, for the first time in its history, the New York Stock Exchange operated without a trading floor, following the closure, and shifted to fully electronic trading. What is the future of New York Stock Exchange? As one of the oldest organizations and one of the most stable ones, we can hopefully expect many new listed companies on the New York Stock Exchange in the future.